Just one wrong move after applying for a mortgage and suddenly your approval can disappear. Most buyers who run into approval problems honestly never even saw it coming because no one warned them that once you apply for a mortgage, your financial life needs to stay as boring as possible until you close. And I mean boring. Painfully boring, like beige wallpaper in a waiting room kind of boring. Today I'm going to be walking you through 3 things that can kill a mortgage approval instantly. What not to do after you apply, why lenders care so much, and exactly how you can avoid every single one. And stick around because the third one is the one that catches even prepared buyers completely off guard. It feels completely innocent, it feels even normal, but if it's not handled the correct way, it can create an absolute mess right before the closing. And if we haven't met yet, I'm Gary with Homes Ever After. We help buyers and sellers all across the upstate of South Carolina and Western North Carolina. On this channel, we talk real estate and pretty simple English. The stuff that actually helps you get across the closing table, get the best deals, all without feeling like you need a financial degree to understand all this stuff. And this doesn't happen just because buyers are careless. It usually happens because normal, prepared buyers just make normal life decisions at the wrong time. Buyers go out, they apply for a mortgage, they get pre-approved, they're excited about the process, they go out, they find the right home, they even write an offer that gets accepted. And mentally, they start moving in, they start decorating the house and running through all these different things in their head. All the furniture tabs are open, appliances are being compared across the board, somebody's measuring for all the furniture, the new sectional sofa. Then one normal financial decision changes everything completely. And I'll be honest, once you're pre-approved, it feels like the hard part is over. And in some cases it is. But the truth is the pre-approval is not the finish line. It's more like just getting the permission to keep going. So here's the thing, when the lender approves you, they're basically taking a snapshot of your financial situation for that particular moment. This is going to be your income, your debt, your credit scores, bank statements, cash that you have to close. And if anything in that picture changes before closing, well, the approval can too. And that's the thing that most buyers miss. It's not just about getting pre-approved, it's about staying approved throughout the entire process. Because once you apply for a mortgage, the rules really change. And it's not because the lender or anyone is really trying to make your life hard, but it's because they have to verify, sometimes again and again, that the loan still works all the way up until the closing table. Sometimes lenders have to recheck your credit. Sometimes they have to get updated bank statements over and over again. Sometimes they may even have to re-verify employment. They may question large deposits or transfers, especially if there's not a paper trail of where the money came from. The entire underwriting process is whether or not the loan still makes sense all the way up to signing the paperwork and receiving the keys to the home. The lender isn't trying to ruin your life or make things overly difficult. They just need to make sure that the loan still works for you. So really the safest thing you can do after applying for a mortgage is just make sure to keep everything nice and steady. The same job, the same account, the same credit, no big surprises, new boats in the driveway, because even normal life decisions can create abnormal mortgage problems, especially when everything happens all at the wrong time. And if you're about to apply or you're already under contract, this is where it helps to have people around you and people that's working with you who know exactly what it is to look for. Because a lot of the home buying process isn't just about finding the most beautiful home, it's making sure that everything stays nicely packaged together and that the deal is protected once you find it. So let's get into the top 3 things that can kill a mortgage approval and what you should be doing instead. Mistake number 1 is opening new credit or making large purchases. So this should go without saying, but don't open any new lines of credit, don't make any large purchases without at least speaking with the lender first to see how this might impact your approval. This is where your debt to income ratio is really going to matter, and taking on an additional loan could be the difference of being approved for a home at this price point and all of a sudden being disqualified because your DTI has changed. Taking on things like a new car payment, new credit cards, or a furniture loan, even those store card offers that sound really enticing with the additional 15 to 20% off if you sign up today. Say no to those things. Even co-signing for someone else, that's a no-no. Don't apply for higher credit limits on cards or anything like that. Even if you think you can afford it, make sure you speak with the lender first. You don't want anything like this ruining the chances of buying that home that you fell in love with. And sometimes that new payment that you're taking on can seem really, really small to you, but to the lender, it can change things entirely, especially if the approval is already tight. When the lender approves you, he's looking at your current debt. And so if you add a car payment payment, a higher credit card balance, or you co-sign for someone else, that could change things entirely in regards to your pre-approval. And sometimes that one additional payment is all it takes to create a problem. Not always, but it definitely happens often enough that you should definitely have a conversation first. And I know you're probably just thinking, Gary, it's really just a couch. And I get it. It could be a very beautiful couch on top of that. It may be the perfect couch, but if financing that couch ends up costing you your house, then it's no longer just a couch. It's a fancy rectangle of regret. So the rules are pretty simple. Don't open anything, don't finance anything, don't apply for anything from the moment you apply for a mortgage until the moment you close. Your credit profile and financial history needs to stay boring during this time. So if you have any doubts, ask the lender first, not after. Mistake number 2 is changing or leaving your current job. Do not change your employment situation without having a conversation with the lender first. Even good changes where you're making more money can still create problems, especially if they change how your income overall is documented. But leaving a job can create obvious issues, and switching jobs can delay your approval, and a promotion isn't always simple. Changing from a salary-based job to commission can create issues. Bonuses, overtime, and variable income can be treated completely different. Going self-employed, W-2 to 1099 can create a bunch of problems. Lenders need your income to be stable, verifiable, and likely to continue. A job change can be great for your lifestyle, but it doesn't always mean that it's going to be great for the loan and the approval. See, the lender isn't just asking, do you earn money? They're asking, can we verify the income that you have? Is the income stable? Is it likely to continue? Does it fit these particular loan guidelines? And if your income changes during the middle of the process, the lender may have to re-review everything all over again. This can create delays, sometimes new loan conditions, and in some situations, it can even create serious approval problems. So this isn't the time to quit your job and start a brand new Etsy shop selling handmade garden gnomes. While that may be a wonderful dream, it can be terrible timing. So again, no job changes without speaking with your lender first. Even if it feels like good news, it's exciting, and you're making more money, ask your lender first. Not your cousin, not Facebook, not ChatGPT. Ask the lender. Mistake number 3 is moving large amounts of money. And this is one of those that catches buyers off guard because honestly, it feels so innocent. But lenders need to source and document the money that's being used for the closing. Sometimes large deposits can trigger questions. Transfer between accounts can even require certain documentation. Gift money usually has rules, requires written letters of where the money's coming from. And sometimes cash deposits can overall be difficult to document because there's no paper trail. If you sold something and you're depositing the money, well, guess what? That may need a paper trail too. Moving money around can sometimes create underwriting delays. And it's not always that the issue is the money itself, it's where the money came from and whether or not the lender can clearly document it, because underwriting loves a paper trail. If they can't trace it, they may not be able to use it. So let's say your parents or a family member give you money for your down payment. That could be perfectly fine and genuinely helpful. But if the money just randomly shows up in your bank account without the right gift letter, documentation, or lender guidance, now the lender has to figure out where it came from. They have to be able to explain it, whether it's allowed and whether it creates a new liability. And that conversation can sometimes get complicated fast. While mattress money may sound responsible in theory, or that secret stash in your sock drawer, to an underwriter, random cash just showing up usually creates a lot more questions than it does confidence. So don't move large sums of money without talking to the lender first. If someone is gifting you money, make sure that it's documented properly. If you're transferring money between accounts, ask the lender how they want it to be handled. If you're depositing cash, pause before you do it. The cleanest path is usually the path that the lender can document and explain clearly for the underwriter. From the moment you apply to the moment you close, think of yourself as being in a financial holding pattern. Same job, same accounts, same credit profile, nothing new, nothing big, and nothing without. Check in with the lender first. You got it. Because getting approved is one thing, but staying approved all the way to the closing table, that's what we're really after. And look, none of this stuff is meant to scare you. Most closings go smoothly when you as a buyer know exactly what it is you need and how to prepare for it. Because when things don't go smoothly, it's usually because of one of these things: new credit, job changes, and undocumented money. And the frustrating part is that most of these problems can be completely avoided, especially when someone warns you ahead of time. So if you're under contract now, or you're getting ready to apply, and you're trying to make sure that you don't accidentally step on one of these landmines, That's where it's worth having the right people in your corner and surrounding you through the process. Not to make things more complicated, but to help you get to the closing table without any surprises and as smoothly as possible. So here's what I want you to walk away with. Getting pre-approved is a huge deal. You've worked hard to get to this point, but from that moment forward, the goal is to protect it. No new credit, no job changes, especially without checking first. No large deposits or transfers without a paper trail. And before you spend money, move money, open credit, close credit, change jobs, or do anything at all that touches your financial picture and that snapshot, ask your lender first. That's one simple rule that can make a world of difference, because honestly, it's much easier to ask up front than to try to clean up these mistakes after they happen. So are you currently under contract to purchase a home, or you're beginning this pre-approval journey yourself? Drop questions and comments down below. We read every single one and we do our best to point you in the right direction. And of course, if you're buying in Greenville, Spartanburg, Anderson, or Western North Carolina, and you want someone to help walk you through this process before things even have a chance to turn messy, we'd love to have a conversation. No pressure as always, just a real conversation about where you are, what to do, what you're trying to accomplish, and what the next steps are going to look like. So if you found this video helpful, please like, comment, share to anybody who may find this information valuable, because there's a lot more that goes on behind the scenes than most people realize. There's a lot of moving parts to get you to a closing table before you get those keys in hand. So we appreciate you stopping by, and we'll see you on the next one. Take care.